Budget management. Now, Anne had a great webinar a couple weeks back. So for those of you who are new to this or want to learn a bit more outside of what I'm going over, definitely check out our last webinar with Anne on the building blocks of a balance sheet. It's great. It's a wonderful intro for anybody looking to figure out where to start with this. But this is also a great time to be looking over your balance sheet. Now, it's probably not something you're doing every day, but it's a good time to look into what your assets look like, how things may have grown, and also just generally making sure we stay organized. Now, to reiterate some of the things that Anne has gone over, well, generally with the balance sheet, you're going to be looking at arranging them in a certain way to where what most commonly is done is you have the bank accounts, which is the most liquid, meaning the easiest to access cash and other assets at the top. Then it works its way down to the more illiquid stuff like retirement accounts or real estate, property, etc. Just keeping this updated is a really useful tool to make sure you're staying on track because after all, you don't know how well you're doing until you know where you are, and that's essentially what the balance sheet gives you the power to do. You also want to look at it in other currencies. So what's very useful is having a balance sheet in dollars on one column, and then your local currency, euro, pound, whatever it may be, in the other one. So that way, you can also see the currency effect and really know just how much you're looking at for any particular asset, not just in USD, but in the currency that you're actually living and buying your bread in. Another useful thing for balance sheets, it's pretty common practice to list account numbers on these. And I just say that because some of us will have more than one investment account for more than one purpose. And so it can be a little too easy sometimes to lose track of what's doing what and what's for what purpose. So keeping those kinds of notes in like a short form, whether it's an account number or the purpose of the funds, is just another good way to just stay organized and not have it be too all over the place. Now, I mentioned the most liquid forms of assets on a balance sheet. Now, when we talk about that, we're talking about things like, well, what you have in your savings account. In other words, if you needed money today because something happened, there's an emergency, you need to fix something in your house, or heaven forbid, you need to pay for a surgery or something, or if you are going to be out of work for a few months, where do you pull the funds? Best practice for this, well, a rainy day fund, generally speaking, would be equivalent for most people to about 3 to 6 months worth of living expenses. So thinking about just how much you're spending on a monthly basis and how much you would be spending in a contingency and having that available, key being in your local currency. What you don't want to do is keep everything in the States because I know for many of us, there's more attractive high yield savings options there. But what it also means is you have that currency risk. And so being at a point where, say, if the dollar is doing poorly or it's just weakening against another currency, the last thing you want to do is have to do currency conversion fees and deal with an unfavorable exchange rate at that point in time. So it's really just about mitigating and removing the currency risk where possible. It's just having that emergency fund where you can get it today easily without any of those fees and any of those aspects.
And those emergency funds, they're quite a situational case, right, Josh, in terms of if you were the breadwinner in a family as opposed to being perhaps a younger couple where you're both working and can essentially live with one of your incomes for a shorter period if required. So I guess it's a personal kind of calculation, but that 3 to 6 month figure does give a good ballpark figure to aim at depending on your situation.
Yeah, you can think of it as a general rule of thumb. It's a bit of a moving target, to be honest, because, well, it's not even that it can vary from person to person. It can vary within the same person's life because life changes, goals change, circumstances change. If you are a single income household, then that would suggest that you might want to have a bit more than that because you might be in a harder or more disadvantageous financial position if you were out of work as a family unit. It could also mean, hey, if you're single and the only dependent you have is a cat or something like that, or a plant, something nice and simple, well, maybe potentially, do you need 6 months? It really depends on whether or not you expect to need it for that long. But the point is, it really does depend on the situation. Some people will need less, some people will need more. It's just something to keep in mind is the big what if X, Y, Z
Absolutely.
happens. Yeah. Other issues include debt repayment. Now, for those of you who keep credit cards, if you're paying off the balance each month, great. If you're not, well, maybe you look at paying off the higher interest loans to save on interest expenses. Just making sure you stay on top of those things. You might prefer alternative methods of debt repayment, like paying off the not necessarily the higher interest, but whatever is the smallest pieces of outstanding credit card debt you have, just to kind of get things going. But really, the more efficient way that we tend to recommend is just going after that higher interest, because, well, yeah, the more you take care of that, the easier it gets to take care of the rest of the debt. Related to that is, speaking of credit cards, credit scores. That's something that's a good idea to be checking every year. So end of year seems like a great place to do that as well. For many of you these days, you should have access to this with banking apps on the US side. A lot of them started to offer this, which makes it nice and easy. For those that don't, it's nothing to worry about. It just means that you'll have to do a little bit more clicking. There are resources out there like Credit Karma is one, Annual Credit Report is another, that do allow you to check your credit in these types of ways, and just to see how it's doing, making sure that you're aware of all the credit cards you have open, that there isn't any unfavorable or unsurprising information on there. If you're not using a credit card, you may consider freezing your credit score if you don't intend to use it. And another thing that we see a lot is people using credit cards outside the US that are American credit cards. You don't necessarily think about the currency conversion fees that they charge on that end. So just some of the things to be thinking about there when you're looking at credit scores. Just make sure you're checking it, you're staying on top of it, and that you're considering aspects like the cards you have open, and making sure that you're not paying fees that you might not be aware you're paying.